You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome back to everyone's favorite bi-weekly source for all things options. At least I hope so. Yes, it's time for the option block. If we sound a little bit different, it's because we're coming to you once again, at least I am, from the southern studio. A little more genteel time, sipping some sweet tea on the front porch, getting out of crazy Chi-Town for a little bit of summer R&R, summer rest and relaxation, as both the Rock Lobster and Uncle Mike fall off their chairs. I need you boys to mute. Remember, I can't mute you guys here. There we go. Much better. They're still upset listeners that they don't get the cool music that you guys get. So they're a little grumpy. They're taking a little umbrage. We'll get to them in a second. You guys know the drill by now. iTunes, TuneIn, Stitcher for the podcast. Website has everything as well if you want to just stream it or go back deep into the archives. Good way for you to go there. And, of course, last but not least, you can always grab our mobile app. It's all fun there as well. And, of course, you can join us live, you hardcores out there, every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, which is where I am right now, East Coast, for the show. And, of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, all that good stuff. We do enjoy hearing from you guys most of the time. 99.8% of the time, I would say. The Rock Lobster can't speak for him. He's a little bit grumpy. That's why he lives in the middle of nowhere. All right. Speaking of my crew here, my crew of fellow all-stars, let's get rolling. First off let's go back to a little scenic provincial hamlet right outside Chicago where they have delicious gyros and lemonade, at least so I'm told. And they also have some fun wealth management, and they also claim to be the water garden capital of the world and everything else, and also have invented pickles. They claim a lot of stuff out there. Let's try to separate the myth from the reality. It's Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
Always happy to be here, and for the record, we never claimed to invent pickles. We just are the former pickle capital of the world.
Okay, so yeah, I knew you had some you claimed some fame in the pickle category. I wasn't sure. Maybe you thought you invented the kosher dill, maybe something along those lines. Whatever it is, you guys did something out there. And I know you make a mean gyro and lemonade, so I won't fault you for that.
That's good. That's good. We did not invent the internet, for the record.
Oh, you're not. So no, Al Gore does not live in St. Charles. Can you confirm or deny?
He does
that,
not.
Sir? Okay.
He does not.
All right. I'm glad we at least solved that one mystery. Where is Al Gore? He's not. So take your pin out of St. Charles. All of you had that in the home game because he is not there. And let's go farther afield. Maybe Al Gore's there. Who knows? Maybe he likes the quiet life on the coast of Maine, grabbing lobsters and picking VIX out of his back pocket. It is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. How's it going, dude?
It is going well. It is going very well. I just I had a little trade reconciliation there with the meatball, and everything is good. I got stuff happening. All I can say is you're doing stuff. What are you going to do?
Tell him he needs to pair the fava beans with a nice Chianti. That's what he needs to do. They don't go well. They don't go well with PBR. That's all I'm going to say. We know he's in Costco, so just tell him to get out of the beans aisle and he's good.
Exactly. I think he's in Costco, though, in Michigan.
Oh, yes. That's his. I go south. He goes inexplicably north and a bit east. So there you go. To each their own as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. And, oh, what a one we got in store for you today. Not sure if you guys noticed, but a lot was popping off today while I was poolside relaxing and enjoying myself. The market was conspiring against me, saying, no relaxing, no enjoying for you. There'll be none of that. There is work to be done because, once again, the market's a little bit spooked by all of the continued trade war rhetoric after, here it is, coming on the heels of the Meatball and I kind of predicting kind of a sleepy at least tail end of the week there from a vol views perspective. But we didn't count on, yet again, the trade wars lighting things up to the tune of big sell-offs across the board. S&P off over 1%, about 1.3%. That's to close the day. It was off further intraday. Dow off about 1.2% on the day, over 300 handles for all of you who like discrete point increments. There you go. And, of course, the tech-heavy NASDAQ also taking it on the chin, off 2.2%. A lot of this on the heels of Trump kind of escalating his rhetoric, saying he's not only going to initiate all of these protectionist moves in terms of tariffs, but also perhaps block Chinese investment in a lot of technology firms, and that spooked the hell out of Silicon Valley and the street and everybody else as a result. We saw a lot of big tech names leading the charge down, a lot of other names as well kind of following suit. All this resulting in a VIX cash taking a nice pop here, getting as high intraday. I know we were over 1961 intraday. A good year, not a good number for VIX, at least right now, getting into the summer doldrums. But it giveth and it taketh away. We're closing out the session here well over two handles below that now, about 2.3 handles down from those highs, right about 1730 or so in the cash land. So we saw the spike, and then it kind of came back, but an interesting day. And Mr. Rock Lobster, never let it be said that I do not give credit where credit is due. I may have maybe no sold your prediction a little bit last week, giving you a little bit of gruff for it. Thought it was a little bit extreme. I may have even put it over to your counterpart, the Meatball, on vol views on Friday, and he also thought he was perhaps a little bit extreme. Your 50 handle prognostication, but lo and behold, sir. Here we are today, a few days later, one show later, and 50 handles came to pass. I know we're closing off about 35, and intraday we were down looks like about another 22 handles in the S&P. So do the math, about 56 handles. So Mr. Rock Lobster, let's start there. First off, I doff my cap to you. Let it never be said that I don't give credit. I will do it. I give umbrage, but also credit in equal measure. So I'm a fair dispenser of all things. So let's start there, sir. What in your VIX zones got you thinking 50 handles and made you fight through the criticism to stick to your guns?
Well, I have to say, though, after doing the show for 7 years, I finally got props after 7 years. So
all the props, sir. All the props.
If you wait long enough, good things will happen. What in the VIX zones? Is really when actually, and we saw something similar in at the beginning of the year. You don't like a low VIX and low vol future premium. So I do this in VIX Made Easy in all our classes. We try to practice what we preach at Option Pit. But you want that healthy future premium when things are supposed to be kind of benign, and then all of a sudden, they're bidding the VIX cash up, realized vol is 5% and they're bidding the cash to 12.5. It was not nothing. The movie was not playing right. So, and as of right now, now everything is starting to price, right? You have, we're closing down almost 2%. We're closing down almost 1.4% for SPX. VIX is 17.5. It's about where it should be. It's now pricing a move. The whole tariff thing, who knows, blows over, gets worse, whatever. We could be up 1%, down 1% tomorrow. So VIX is pricing. Now the move has come to fruition. So, of course, from a trade point of view, you want to get rid of maybe some of those VIX call spreads. You want to get rid of some of those VXX call spreads, unwind some of those positions. However, we are still in a very, what I would just say, a fairly backward situation. We got into, I think, 19 handles. So we broke into zone 3 today. We were in zone 1.
Woohoo! Is it party hats time? What do you do for zone 3? Is there like, do you set off fireworks? What's the deal? What's the drill?
Actually, you have to put on a hat and dance. That's what the most significant thing that happened today was cash went over all futures in the middle of the day when everything was just the shiitake was kind of hitting the fan. We were printing 19 and change. I think the February future didn't get over 18. Was sort of, it was DEFCON 4, but we're only in zone 3, and normally you get that kind of steep backwardation in zone 4. So we almost got there. You didn't get the front end of the curve moving up enough and to really light off fireworks. I'm not saying we can't have more volatility tomorrow. We certainly can. Even in the after hours, VXX is moving around a little bit. But the future curve is very telling, I think, when it's doing things that are right. So we have some simple proprietary values for what the curve should be at any point in time. So when it deviates, it gets my interest, and that's what we had. So that part, I can't complain. So no complaints. But right now we're starting to flatten, right? The distance between July and February is about 1 point for the future. So that's a pretty flat curve. And VIX is like 1720. So everything I would say is very flat. When things are very flat, the liquidity providers are throwing up their hands and saying, I don't know what the hell's going on. We could be a 14 VIX or a 21 VIX in 2 days. And that's kind of, once you have all this kind of shock, you need continuation. So do we continue up or do we continue down? If the Chinese decide, who knows? They can say, I'm tired of this stuff. We are not going to buy any treasuries. Then where to open? Who the heck knows? Who knows? Maybe the Dow's down 5%, 8%, something like that. So that's why you have risk control and you have long contracts. So I think anything could happen. Maybe they're back channeling, whatever, but it is by no means done. I think it's just seeing where, how far and how much it takes us. And I think it might be a buying opportunity in certain stocks. But realistically, it's only a very small sell-off. We're back to 2,700. And that's kind of where we are. So I'd say, let's see what happens. And let's see how active or if this whole trade kerfuffle gets solved again. But 2% down move was pretty solid. Mostly, I think, just a lack of liquidity.
Yeah, that probably exacerbates it. Everyone probably listened to what we said on Vol Views last week. They're already heading for the beach or for the southern studio here or something like that. And there was no one there to really backstop it when an S hit the fan today, sir. By the way, you're getting the love here, Mr. Rock Lobster. Clinton Burnell in the chat room saying, congrats, Andrew. So you're getting a lot of love here. Speaking of the chat, by the way, it looks a little light in there. I know I'm having some problems with my own setup here trying to monitor what's going on in the chat. I'm getting some sporadic reports of people having a hard time connecting to Mixler. So that is you. First off, you're not listening to this live, so I apologize. But you're listening to it on the podcast, so check out the podcast. Of course, we'll make sure we post the link to the recording of the stream right after the show as well. We know a lot of you hardcores want to be in there, so I'm probably getting emails from you right now. So if you're having problems, you're not alone. It looks like Mixler is having some issues again. So stay on it, stay diligent. We'll keep an eye on it. Hopefully things will sort themselves out. Speaking of which, Uncle Mike, sir, was a crazy day when you weren't sitting back and just basking in the reflected glow of Andrew's prognostication. What was catching your eye today, sir?
For sure. Well, I think it's definitely a lot today. A lot of what was happening was to do with the trade war, even though we're not in one technically, according to the White House. But nonetheless, I think a lot of this did have to do with that. I think the fact that Harley Davidson had announced that they were looking to move a lot of their production out of the United States. I think that was kind of one thing to where it really made the market take notice. One thing that did happen towards the end of the day, Mark, I'm not sure if you caught this or not, but the White House did announce that they said that they're not going to restrict investment from China. But that was it. It was a very vague thing, but the move that we had at roughly 2:30 Chicago time, 3:30 your time, a lot of that, I think, a little bit of a move upward. I think that had a lot to do with that announcement. Now, whether that holds true or not, who knows? But nonetheless, that was one other thing that happened. One thing that I did do on Thursday, which I had talked about in terms of shifting from long premium to short premium, the benefit of what I was able to do in shifting to short premium, that did enable me to take some deltas off the table, which after seeing today's market, I was like, wow, I'm glad I have a lot of the deltas off the table for right now. So that was a benefit, and it's kind of one of those things where, like Andrew said, it's really in the grand scheme of things, this is not a major down day by any means, but never fear the market, but always respect the market. The market does always have the possibility of going down, and make sure that you're prepared accordingly, no matter what your strategy.
So I have to ask, Uncle Mike, today's activity hasn't taken some of the bloom off your bullish rose. You're still fully. I know you said you took some deltas off the table, but your outlook's still firmly bullish.
Oh, for the long term, for sure. But also short term cautious is also the second part of my all-time outlook. And for the time being, definitely the caution monitors are up. Just got to make sure that we don't get our faces ripped in times like this. And if that's the case, then usually in the end, it turns out well. And going on, 15 years now in terms of trading options, still able to do it, so that's a good thing.
You know what else is a good thing? At least I like to think so. It's the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block. One of the things I like about being here in the Southern studio, in addition to the ridiculous torrential downpours that just launch from the skies, the second I start doing shows down here, I think Mother Nature's trying to tell me something here. The second I start talking into a microphone here in the Southern studios, the skies open and threaten to wipe me off the map. So hopefully, maybe they're causing the mixer problems. I don't know. Hopefully, they don't knock us off the air completely. Fingers crossed here, listeners. I can see some blue sky in the distance, so you probably can hear that thunder ringing through. They like themselves a nice thunderstorm here in Florida. Oh, let's say every day, pretty much. So fingers crossed that we'll keep things on the air as we roll on into the Odd Block. Yes, it's that time of the show, listeners, where we talk the weird, the wild, the wonderful, the interesting paper that is lighting things up here in the old options market. And I'm going to kick things off by resetting my statistics, because my analytics, because, of course, why would they be up and running for me the second I actually need them here in the Odd Block? So maybe, Mr. Rock Lobster, you can assist me while I am rebooting my analytics package. Why don't you take a look at our old friends, the Jan 2019 50 puts in Tesla, and tell me what you see there, sir.
In Tesla, in that stock that is always well, let's just say fraught with questions and fear, and well, I think the 2019 puts, the open interest is 58,000 and a whole whopping 399 traded. If we go out to a little bit farther to the Jan 20. I can't even. It's hard for me to say Jan 2020.
Welcome to my world. Now try saying Jan 2020 20 puts 5 times fast.
Oh, Jan 2020 20 puts. Those are 14,653 trade.
People love these things.
Well, what's funny is it's the most active series in the Jan 2020 cycle.
Yes, it's crazy town. It's complete crazy town, sir.
I have to. You might have to take some credit for all this. It's the most active series again in the Jan 2019 cycle, where you can get some of those tasty January 2019 400 calls for $27. Although I know the premium trader in me wants to sell those at a 50 volatility. But all you can do really is close your eyes. It's kind of one of those things where I'm going to just throw my line into the water and close my eyes and hope it's all better later on.
I think it's fair to say the juice for free person within you will not allow you to trade these, correct?
Yeah, it will not. It's just I look at it and I go, I can't see it ever getting there, but it could be squeezed up $30 and it would be just a margin. It would be a margin issue. Although I have seen stocks shorted, even one lots, turn into unbelievable disasters. So losing $100,000 on a one lot. So
100 on a one lot. Wow, that's impressive. Yes. That takes some work.
It does. It was actually Amazon. It wasn't me. It was a colleague of mine, and it was 1997, I think. And it was just the valuations were insane, and they got much more insane. So he wrote it to $100,000 loss. He did not close it into the total crazy bull market like 99 2000. That's when he took the big pipe on it. And then all of a sudden, when tech started to go away, I mean, he literally he ended up making like $50,000 on the trade, if you can believe that.
So after he closed it, he reopened it because it started dropping?
Because it split multiple times, right?
That's right.
So
his one lot ended up becoming probably like 100.
Yeah, and then as it fell apart, of course, you have the law, the market averages are being a little kinder to you on the downside when you have. So it was ugly. It was ugly for a very long time, and then it got smacked down to, I think Amazon traded even split adjusted it was higher, but I think current price it got down to $13 or $14 in 2002. So hard to believe that, but that's where it was. And he closed it. So as much as I don't think Tesla can be worth $400 in January of 2019, my opinion means nothing, because I have seen ugly.
You've seen the madness. I will say, when I first walked on the floor of the SIBO in '97, the one name I heard just ubiquitously shorted from everyone's mouth was Amazon. So I could see why your friend would probably leg into a vertical like that, because it was impossible to escape. Oh, this thing's running out of cash. It'll be done in 3 months or 6 months or 2 months. And we're hearing a lot of similar stories out of Tesla. I'm not saying Tesla is analogous to Amazon, listeners. I'm just saying we're hearing similar stories out of there these days. Let's move on to a name that doesn't get as much love. Excuse me, unless you're talking about Andy Warhol paintings. This is Campbell Soup Company, ticker symbol CPB. Closing today, $42.23. Up a decent day for them, up about 9.5%. Suddenly getting the hiccups down here. Not conducive to radio hosting, listeners, but I'll power through it. Up about 3.5 handles here on the old show. On the old day. This is a name that does about 9,000 contracts a day here on the old show. Today doing about 112,000. So decent day for Campbell Soup. About 3.5 to 1 calls over puts. It was a call palooza out there, listeners. These calls are causing indigestion for me. That's what it is. All this call palooza. A lot of buy rights out there in Campbell Soup today. July 42 is doing a lot of paper out there. Nearly 6,000 contracts. July 44 is lighting up. July 37s. Also activity out a little bit farther into AUG. The AUG 33 is doing 2,000. But what caught our eye in particular out here a little bit of an AUG vertical. It was the AUG 3840 vertical going up 4,000 times. 3844 vertical. Going up 4,000 times for 460 on the calls and $1.45 on the AUG 44s. Again, 4,000 total. Crushing the bid on the AUG 38s, lifting some offers or close to it on the AUG 44s. So someone coming in and right in this spread, doing it for about a nice 315. Or so out there. I'm about to toss it to you in a second, Mr. Rock Lobster. These hiccups are killing me here. But first, let me go to the chart here and see exactly what the heck's been going on here. In Campbell Soup over the past year. And a year ago, it was $53, almost 54. Then the earnings recently kind of took it on the chin and got down from 35, or I should say 38 down to 35. And it's kind of been hovering in this mid-30s range until today. So, Mr. Rock Lobster, what's your take on Campbell Soup and all this call love here today, or I should say call sale love, while I try to scare myself to get rid of these hiccups?
Well, the easiest way to scare yourself is just to look in the mirror there, Longo.
I set myself up for that one. As soon as I said that, I was like, how long is it going to take him for come up back with that one? So well done, sir. Your brain is still working.
Well, I was almost as fast as Sebastian there, but not quite. What's going on with this? I feel like they're just riding. Don't you want to say riding some calls upward, closing some of those 38s, trying to find a little love? I mean, you got a 4-handle move and the market's falling apart. So I think that's a good instance. An awful lot of open interest closing in here today. Vols explodes. The 41 calls in August, 21,000 open and 21,000 trade, like crazy volume. So perennial almost takeover candidate, Campbell Soup. So I think somebody's just on a little they made a little money, maybe house money roll up, on a 20-cent wide market, paying $1.45. So on the 44. So it seems like maybe they think the soup is good food. They just think, they're going with it. Soup is good food. So the stock was trading $33 not long ago. So they have one day down in the last 10 or 11, it looks like. So, oh my word, what's going on with Campbell Soup? There's got to be some takeover spec with all that open interest in August. So
probably, and you're right. Yeah, my hiccups did cause me to close that short a little bit. There was a lot of OI clearly closing going on out here, particularly in AUG. We saw the 38s had about 10,000 contracts open. Clearly, I didn't scare myself enough. 10,000 contracts open, 4,000 going up today, so it could potentially be some rolls going on up to the 44 strike where there is, no OI going on. Also, 21,000, like Mr. Rocklass mentioned, the 41s going up. And surprise, surprise, there are 21,000 open on that strike. So interesting stuff there as I keep on rolling before my hiccups waylay me completely. Let's go into our old friend here, getting back into the oil services. This is the Market Vector Oil Services ETF, ticker symbol OIH, closing today 25.5, off about 2.5% on the day. Trying to fight off the hiccups this time for you listeners. This is the name that does about 18,000 contracts a day today, doing nearly 60K, a decent day out here in OIH. And what caught our eye? Of that 60K, pretty much half of it, 30K, coming in one mega trade here, listeners. And it was out in July where we saw this big print. It was the July 27th, going up 33,000 times, including a big block of 30,000 going up this morning for 27 cents. The rest, another 3,000 or so, piling in later on in the day. Worth noting, OI here as well, about 47,000 open on this strike. So perhaps someone, deciding discretion is the better part of valor here and closing out. Let's pull up here a little chart and see when this OI was opened. And it was opened not that long ago, listeners, back on the 18th. So, yeah, a little over a week ago or so, right about a week ago now, with about 27,000 trading when they were around 33 or so cents, up to 54 cents. And they continued trading for pretty much 7 to 10,000 pretty much almost every day since, except for earlier this week. So, yeah, we've seen a lot of paper going up on this strike. So it could be somewhat perhaps looking for a move they didn't get and deciding discretion is a better part of valor, or it could be someone saying, I didn't put on enough last week. Let me put on another 33,000 on top of the nearly 50,000 that are already open on the strike. Let's go here and dive into the chart before I have the Rock Lobster save me from myself, which is started off a year ago, about 25 bucks here, so right about where we are now, and got as high throughout the year of nearly 30 back in January. And again, recently, back in about a month ago, threatening 30 again before coming back down. So Mr. Rock Lobster is the third time the charm. Are we going to break 30? And our friend here on the 27s, you think he's wagering on that, or he's saying, I'm getting the heck out of Dodge?
This is one of those things where oil has gone up in the last year, and the oil services index cannot get off the mat. So I don't know if it's because nobody's going to try drilling for new stuff or just bring new production online, but it doesn't look very good for OIH and the rest of the services industry. They can't get this off the mat, and that's I think it's problematic. So I just had two thoughts on this. One is either this was a rider, or they are long and they didn't get the lift, so they're just going to dump the calls, or they had bought these calls and maybe shorted stock, kind of put on some sort of synthetic, and then unwound the stock as OIH is drifting down, and now they're just trying to get out of what they can get for the calls and just sort of complete the enchilada. So I'm still trying to see if there was any stock, for this thing. So that I can't see right now, but other than that, I did see the options traded a big block. So it feels like one of those, just I'm kind of getting out of Dodge. We had a little bit of a move, and OPEC just announced their production cuts. So everything is just kind of stuck. If you're not getting a rally on that, why stick around?
So you're thinking it's getting the heck out of Dodge, huh?
It's feeling getting out of Dodge.
He didn't stick around that long. He's only around for like a week, right? But sometimes that's all it takes. Easy for me to say, here I am, listeners. I've scared myself. I consume beverages. I'm doing everything I can. But they continue to plague me. So we'll see what we can do. I don't think I've ever had full-on hiccups on a show before. So that's saying something in 11 years. We'll see. We'll keep powering through it. We got thunderstorm, torrential rains, hiccups. All the elements are combining against us, listeners. Mixler issues, but we're powering through as we go on into, our final name here on the odd block. We're talking Tesla earlier. We're talking long-term Tesla. If that's not your bag, but you want some more long-term automaker stuff going on, we got you covered here with our final name. It is Fiat Chrysler Automobiles. Haven't talked about this one in a while. Ticker symbol FCAU. Closing today at about 19 bucks. So pretty much unched on the day. This is the name that does about 8,500 contracts a day. Today doing 53, almost 54,000, nearly 13, almost 14 to 1 calls over puts. That brings us to where our eye of Sauron was drawn today, listeners. And if Andrew didn't like saying Jan 2020 before, he's not going to like this one too much either, because they're going back out, listeners, all the way out. Not Jan 2019, nope, to Jan 2020. Easy for me to say with all my hiccups. And it's out to the 30 strike. And like I mentioned today, the stock closing right now today, right about 19 bucks. So this thing not too far off needing a double, for all these calls to start looking good. But the 30 calls lighting it up to the tune of 34,000 total on the day, including a block of 25,000 for $1.05. Pretty much lifting the offer. So as you might expect for going that far out on a name like this. $1.05, 25,000 total of over 34,000. Worth noting, 15,000 open already on the strike, and those have been open for a while, listeners. Actually, they were opened back on the 1st when these options were trading anywhere from $1.85 to $1.90. So, and they traded 15,000 then. So that OI open then. Could be someone deciding, hey, I liked them at $1.90. I really love them at $1. They got cut in half, so you got to buy more, right? Or it could be something else entirely. Let's look at the chart here on good old FCAU. Not a name we break down here on the odd block too often. And a year ago, they were looking, way less, about $10. So roughly half where they are now. They got up to 24 and a change back in January, and again recently in April. and then kind of coming off that again right now back to 19. Mr. Rock Lobster, take us home. What are you feeling? I know you hate Jan 2020, but you just got to deal with it one more time. What are you feeling on these Jan 2020 calls in FCAU, sir?
I want to say they're just writing these things. I mean, can Fiat Chrysler make a 50% move in a year and a half? It seems like a tall order.
It already did it this year, right? I mean, it was a year ago. It was 10.
I know, but has it got another one in them? I'm just
that's $1 million question, right?
I guess so. I am seeing some August 20s go up 10,000. Maybe they're trying to write a little premium against that. It is curious to say the least. I know that Fiat, they do own part of Fiat is Ferrari. I guess they still own a chunk of that, even though they spun a bunch off. So it's always a wild card there. It could have, obviously it's happened, so it could happen. But man, what are you looking there? Are you looking at for a double, a single? I mean, how much are the 25s are, 225, 30s are not. It certainly could happen. I can't say it can't happen, but it feels like a tougher road to sled.
Yes, a challenging one. We'll see if you're feeling the love, listeners. That Chrysler can do it again. Meanwhile, we're going to do it again right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
Oh, I haven't heard some of these drops in a long time, listeners. It's bringing me back to the early days of the network. If only the Rock Lobster and Uncle Mike could hear these, but they cannot. So they are left wondering what is going on. What kind of awesome music are you guys getting? Well, it's just amazing, sirs. You'll have to just wait and wonder. Listen to the podcast to find out for yourself, or listen to the live stream as well. Actually, don't listen to the live stream because that'll screw everything up. So don't do that. Don't listen and be on the show at the same time. That's a problem. All right, let's go on to our mail block, listeners. And we asked you last week. We wanted to have some fun with some entertainment companies. So we said, hey, let's bring back the proverbial gun to the head. You guys like being forced to buy premium. We've heard it from you many times. And by like, I say you don't. You love to sell premium. But we made you buy it again this time. We said July at the money straddles. What would you rather own in your own portfolio? A little bit of WWE, a little bit of Disney, a little bit of Wynn, a little bit of SeaWorld. And the winner, at least for you guys, was the Wynn $12 July at the money straddle, 37%. Coming in number 2, Disney, $5 straddle with 30%. 17% saying WWE, 16% saying SeaWorld. I'm going to say anecdotally that maybe that last one, maybe you want to rethink that one. A, it's cheap. B, like I mentioned on the shows last week, I'm recording these shows from literally across the street from SeaWorld right now. And let me just say anecdotally, the old Peter Lynch, you go to the parking lot and you see if people are actually going into the store. Driving by SeaWorld the other day when it was opening, I have never seen longer lines to get into that park in my life. We weren't even going in. We had to go around. Traffic was backed up through intersections in both directions. Never seen anything like it before in my life. So maybe it was a giveaway day at the park. I don't know what it was, but whatever it was, people are back in SeaWorld in droves. So I guess the Shamu debacle is behind them. I don't know. I can't speak. It was only one day, only anecdotal, but I trust my eyes, and my eyes saw quite a few people piling in to SeaWorld. So I guess the love is back there, listeners. So maybe you want to take another look at that $3 straddle, and maybe you want to put someone else against it because you don't just go out and buy premium. You know how that works. All right. Let's see. Got some bunch of email questions, comments coming in here. Got some weird ones. We always love the weird ones, like this one from SecretlyPsyched. He hit us up and also Goldman Sachs for some reason and said, is it possible to short sell a campaign? Or how about an entire state party? Does he wants to know if we have some sort of derivative strategy? I'm assuming he's got some congressman he's talking about here. I don't know which district this is, but here we go. Mr. Rockhouse and Mr. Uncle Mike, perhaps. Have you constructed in your years? You ever had a client come to you and say, I want to short sell a politician? And if so, how did you go about it, sir?
Good gosh, I wish I could short sell a lot of politicians, to tell you the truth, but I believe every now and then in the presidential elections, it's not a listed product, but I believe that they have futures on the Democratic and the Republican candidate. But I think I don't think it's on any of the major exchanges in the United States, but I do believe that they exist. In terms of how it would exist with a local or a state political candidate, not quite sure on that. So I would not be able to tell you. The only thing that I typically would tell my clients, if they're not for a political party, I guess, or you're for a political party and control, you could potentially buy the municipal bonds if you believe that that city or that state will be a good city or a good state. But once again, it's a municipal bond. You're not going to make a killing on that by any means.
Muni bonds, baby. The sexiest of sexy plays out there. Yeah, I find in general it's usually preferable not to let your politics infect your trading, because then you start to letting your heart guide your mind. But a silly question nonetheless. So we like to laugh here. But yeah, short answer is really no, unless you're talking broad macroeconomic terms that you want to short. Let's say the president's ability to impact the economy positively or negatively. Then of course you can always short the index and see how that goes. But aside from that, not really. No secret derivative strategy to shorting. Particular candidates. Let's see. Knowledge is in power. He's writing back in after last week. This is the guy last week, you'll remember, who he had a hard time figuring out the profit on his calls. Remember, he's like, if they went in the money and this, how they sell them. What do I, how do I figure out the profit? We told him, hey, maybe you need a little bit of a better grasp on fundamentals. Gave him a few suggestions. He writes back and says, you guys, turns out you guys are absolutely right. Well, thank you. I have a very poor understanding of options. What's the best podcast episode for beginners? Well, it's a good question. I would say there's no episode, in particularly of this show that I would point you to that say, hey, that's pure for beginners. This show has always been tuned and geared towards people who are a little bit more savvy. Not to say we don't welcome beginners. We welcome all types, but we are probably going to discuss some topics, things like SCAU or, things like that may, different types of strategies that you may not be familiar with. So we usually assume a little bit of fluency, a little bit of options knowledge when you're listening to this show. Beginners, always welcome, but I would instead steer you towards our options bootcamp program. That's designed, as the name implies, for very basic stock people who are dipping their toes into water for the first time. We have many episodes of that now in the can. Just go to Options Bootcamp wherever you find this show. Just search for it, and it should come up. If you look for this show, actually, you should see our network. You can click on our network to find all the other shows we do, and that'll come up there. And you just start at episode 1 and go from A to Z all the way through that. If you listen to all those episodes, it's going to be about 50 to 100 hours. I forgot exactly how many episodes we have, probably closer to 100. But if you go through all that while you're commuting, over a couple of weeks or months, you'll come out of that with a fairly strong understanding of options. And of course, you tune into this show a couple of times a week. You get some fun stuff like the strategy block. You get us breaking down some other fun stuff. You start putting all the pieces together, and pretty soon, Mr. or Mrs. Knowledge is power. You'll see that you'll have a good grasp on things, and hopefully the options world and you will be better for it. We said we're having some chat problems here, but seems like we got some comments coming in. We got everybody Clinton here again, who loves you here, Mr. Andrew, saying Tesla had a lot of option activity in like 415 strikes, in September and January, I believe. Well, let's pull it up here. September, I didn't see any 415s, and Jan, I don't see any 415s, unless you're talking maybe far out. So let me scroll. I looked at Jan 2019. Let's go to our old friend Jan 2020. Maybe that's where you're talking about here. And I don't see a 415 even listed out there, so cannot be that. I don't see any 415s lighting it up. I see 400s going up in Jan 2020 to the tune of $1.50 out there, so maybe that's what you're talking about. Mr. Rock Lobster, you know what he's talking about? I do see 200 of the Jan 2020 700s traded today, Mr. Rock Lobster. Maybe that's what he's talking about. You have any idea what he's talking about here, Mr. Rock Lobster? 415s lighting it up in Tesla today?
I don't have any idea per se, so is he looking for just more action there? So I wasn't following Tesla big today, so I was a little bit preoccupied with the vol space.
Oh, yeah. I could see that. You weren't following Tesla when VIX is spiking and the market's selling off 2%? What's wrong with you?
I wish I could say I was, but I was not. So
He's clarifying here. He's saying it must have been the 400s, and it was over the past few days. So there you go.
Oh, okay. Okay.
So we must have missed it, but we'll take your word for it. We'll go back and dig. It probably was maybe some 400s. Yeah, it's not all downside in Tesla all day. Certainly not. You know the zealots are out there and out in force. We just like to talk about those crazy puts because A, we kind of discovered them, and B, they're kind of crazy. And C, they're just silly, which is, Jan 600's trading 400 times today as well. So yeah, you can pick we can do this all day, picking crazy.
It's taunting.
Yes, it is. Picking crazy Twitter upside. That could be a show in and of itself. What crazy Twitter upside lit it up today? 700. So let's get into that. Let's see. More kind of intro questions here, which we welcome as well. Hey bartender man. Got some good handles this week. Hi. Hello, Mr. Bartender Man, or hey bartender man. I have a question for you, he goes on to write. Well, you're out to the right place. If I'm interested in buying options in a stock, what's the best way to go about finding the best strike/expiry? Basically, if I sold a stock for a nice profit, but then wanted to participate in a move higher, should it keep going up? For example, he puts here IQ. Or if I've been watching something and I think it's about to break out, but don't know exactly when, which option should I be looking at? Weeklies, monthlies, leaps, etc. When is it better to do one length of option over another? I think this is I think this is basically the question that I have. Thanks. All right. He went a long way around there, but we got you here in the end. He wants to pretty much break down when you should be using different tenures of options. Well, first off, in the scenario you give there, I don't think weeklies are going to do it for you because it sounds like you want a little bit longer term. I don't think you want leaps either. I think something in a couple of months. I mean, you don't illuminate exactly when whatever. Here's what basic. It should line up with your outlook, right? If your outlook is this stock's going to pop in the next 2 months, you probably want 2 months worth of exposure. You don't want to keep rolling a weekly every week. That gets expensive really quick. So yeah, something that lines up with your outlook, and you don't want to go too far either. A leap is going to get you. You're going to pay a lot more than you need for bang for your buck. You want to keep your bang for your buck as maximized as possible. Mr. Uncle Mike, when someone comes to you and they say, "Hey, I'm looking at should I do weeklies or monthlies or leaps?" and you're looking at breakouts in names, what do you usually tell them, sir?
Well, I would say that when you're looking at it, I would agree with you in that usually you want something in the middle unless your sentiment is further out, then yeah, by all means do a leap. The thing to remember, whenever you're investing in an option, you're also investing in time, you're investing in volatility, you're investing in interest rates. There's a lot of moving parts to an option. So ideally, if you want to be part of the upside and you don't know when the upside is going to happen, then ideally the stock is the way to go, I think. But with that being said, I would agree that most of the time I would say to go somewhere in the middle with it. The only time I could see doing a weekly is perhaps if you could do like maybe a 98 Delta weekly and keep rolling it every week. The bid-ask spread would probably bite you doing that, as well as the commissions. But if you really wanted to have no volatility factored into it at all, you could do that. But full disclosure, I've never done that. So I would say kind of where you are, Mark, but also to our listener, make sure you have at least somewhat of an idea of your time sentiment on when the underlying is going to move as best you can.
You could do that. I think you would hate life pretty quick if you started doing that, but you could go that option. That is an option for you. Mr. Rock Lobster, sir, you of recent prognostication fame, you're getting into the time frames here. What do you say when people come to you and say, "Hey, weeklies, monthlies, leaps, what should I be slinging, sir?"
Well, one is risk reward profile. Like what is that call going to deliver, and what does the underlying have to do? A lot of times you buy a call, and unless the underlying does something fantastic, you won't even keep up with the decay profile. So you have to take that into consideration. I generally like buying calls in around a 6-month time frame if I'm just going to buy them and just try to hold on to them. The only exception being, when there's like a shock involved or something like that, where short-term options for buying stuff is much better when you do have that real vol shock. So, but overall, I would say, kind of 6 months, 3 to 6 months out, something like that, because you don't want to have ton of exposure to the underlying with being long an option. If it just craps out, you need a plan, I think. And most people, they buy calls and they're like, okay, I'll just wait till it goes up, and then the stock doesn't go up and they're unhappy. So the second part would be I would pick more near to at the money options and less out of the money options, because there's still plenty of leverage in buying an option over a stock. I mean, you one contract, costs you $150 instead of buying, 100 shares of stock, which could cost you, $2,500 or $3,000 a margin or something like that. So there's plenty of leverage in the option to buy something near the money, and that way you don't need a lot of move just to make some money. The problem with out of the money options is you need a lot of time and you need some volatility to help you out. So it's kind of a double-edged sword there. So that's what I would say as far as what type of option to buy to continue to participate. Keep it closer to the money, unless you're playing with house money and you want to try something more speculative out of the money. But in that case, you need a lot more time.
Yeah, it's hard to do generalizations when you're talking options, but most of the broader, longer-term analysis I've seen, you're talking about sweet spot for just buying premium. Forget about outlook and anything else. Does seem to be in that round that 3, maybe towards the 6-month time frame, where you're kind of finding the sweet spot between paying too much for time premium you don't need and just erode into zero in a couple of weeks. So it seems like somewhere, rule of thumb, all other things out the window. If you just want a broad rule of thumb for premium buying, probably somewhere in that window is probably a decent place to play. But again, there's no such thing as a blanket rule. Nothing works for everybody, but just something to keep in mind as you're looking and learning about options here. All right, let's see. We got time for let's squeeze in one more. Some of these are pretty long. Let's can't do that one. Way too long. Here's a fun one. Don G. We got good names this week too. Don G says, I don't like to place market orders because I always seem to pay more than I should. However, when I place a limit order, I rarely get filled unless the stock moves against me in a big way. What can I do? Well, this is now you're starting to see it here, Don G. This is why we spent so much time at the OIC conference this year, focusing on the issue of liquidity, because that's kind of what you're bumping into here. That's in the options world. Does a lot of paper, does a lot of volume, but a lot of that is concentrated. Roughly half or more on any given day is in about 19 to 20 names. You got 50 odd names in the options market world that you could reasonably trade back and forth with some degree of liquidity and not have to run up against what you're talking about here, which is, having to effectively have your order hit the bid or lift the offer in order to get filled. Ostensibly, these price improvement auctions, these pips should mitigate that, but people don't have a huge incentive to step up. You don't say what you're trading here, so maybe that would help. If you're trading front month at the money Apple, you're probably not going to have this problem, but then again, it's going to be a couple cents wide anyway, so it won't be that big of a deal. But you get trading some more esoteric stuff that you probably want to trade, it's going to be harder, and you probably have to work closer to the bid and the offer. That's kind of just the unfortunate reality of the space. There are a few market makers, and many of them don't have any incentive to step up in a pip auction in any name outside of those top 20 or 50. So if you're trading one of those, bear that in mind. The slippage is going to be somewhat high. But yeah, don't go the market order route. You don't want to go that route. That's not a good way to go. Mr. Uncle Mike, any thoughts here? He's having problems. Again, he doesn't say exactly what he's trading, so it's hard for us to be specific. But sounds like he's bumping up into that liquidity issue, sir.
I bumped up into it many times myself. That's one of the main reasons I only trade things that are extremely liquid. It's very frustrating when you want to get into or get out of something and the bid ask spread is 9 miles wide. So I feel your pain, and the way that I dealt with that same pain is I just made myself trade things that are only a couple pennies wide.
Mr. Rock Lobster, how do you get around this when you're slinging stuff for Carmen line? You got to do some size there. Obviously, you're sticking more and more liquid stuff. But say you have a client comes to you and they want to do more esoteric stuff. What do you usually counsel them?
Well, we use a broker. But if you can't do that, the easiest way is limit order that is within the market. So if the market's, a dime 20, you put in a 19-cent limit order or something like that. Generally, though, I would tell clients, if you have a little time, work around the midpoint and then work the order toward a side. So, because you never know, I tell people the market you see is literally poofy air. So you never know where the actual market is once order flow hits. So I generally start with the midpoint and then work toward whatever end selling or buying. So that's what I would say. And you get a sense, if the vol's going down, it's going to be easier to buy an option. If the vol's going up, it's going to be easier to sell an option. That's just the way it is. So you have to understand what's going around your contract. And I think that's important as well.
Speaking of things that are going around, it's time for us to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. It's where we're watching for what's going on the rest of the week. I think there's pretty much only one thing really to watch right now is this will they, won't they dance with the trade war. Will it continue to exacerbate itself? Will Mr. Rock Lobster go out on the ledge with another 50-handle prediction? Who knows? Sky is falling. Mr. Rock Lobster, we'll start with you. What do you got in store for us for the rest of the week?
Now
you got to follow up. You got to follow up that prediction, so you're stuck now.
I think it's actually not. I don't think it's too hard to follow up. It's inevitable that we do make another move that size. We either going back to where we were, the trade war is nothing, or the trade war is something, and we're freaking out. So I think in a week you'll have the same thing. That's kind of the nature of how the vol works. So I am hoping and ready for it to make yet another move, just like it made today, within a week.
So you're calling for another 50-handle move within a week in the S&P.
Yep.
There we go. All right, we're going to put it on paper. We'll see if the Rock Lobster can do it. 2 for 2 here on the show. Mr. Uncle Mike, same question for you, sir. What are you watching the rest of this week aside from outlandish predictions?
With that being said, excited to see if the Rock Lobster's prediction comes true with this. It'll be interesting to see because I know if it doesn't, you will never let him hear the end of it. At least I hope you won't because that's typically how you roll. But no, I think we're getting closer to the lower end of the range. So curious to see where we go. I think tomorrow is a key day with the numbers. After you have a larger move like today, we need to keep an eye on it. So watching the numbers and a certain person's Twitter account.
Yes. Who could that person be? I just don't know. I think we're watching. I think we're all watching. What is it? Paris Hilton's account. Because you never know. She's market moving. Unfortunately, that music means we got to get moving ourselves, listeners. But before we go back around the horn, Uncle Mike, we'll start with you. If I want to get something what's going on over there in St. Charles, Wealth Manager, what should I do?
Stop by my office on Thursday night. We're going to be talking about spread trading. If you have traded some calls and puts but want to take the leap into doing some spreads or maybe sell some premium and be a little bit more levered or hedged, that's what we'll be talking about. And even if you're past that stage and you're trading education, stop on by anyway. We can talk about what we're all doing in our trading, and that's probably that's my favorite part of the event. We talk about what trades we have going and learn from one another. 303 East Main in St. Charles, 7 o'clock Thursday night local time. For more information, go to meetup.com and type in St. Charles Investment Group.
There you go, St. Charles Investment Group to learn more over there. Meetup.com, listeners, to find out. You can meet Uncle Mike in person. He's a pretty pleasant guy. I met him. He's a pleasant fellow. And he'll buy you a Euro. What's better than that? And Mr. Rock Lobster, in addition to slinging out predictions, what are you going to buy our listeners when they come to what do you got? Lobster for them when they come to Maine?
Possibly. We look for buying your juice for free, buying options made easy in August. For me, our VXX made easy was hugely successful, and I'm sure if people had listened to it, they would be liking it right now, which I'm sure my clients are. So learning how to trade options based on what the vol is telling you is additive to any type of trading regime you have. So I highly recommend it, and well, it works for me, so what the heck. So anyway, that is coming in August. Look for it at Option Pit, and yes, it is possible if people do come to Maine, they might get a tasty lobster. I might do an investment club in Portland. What the heck? So I can actually talk to live people during the day.
Look at this guy. He's throwing out predictions. He wants to actually see people in person. I can attest, listeners, I saw him in person a few weeks ago or a week or so ago in Chicago, and he actually saw people. He didn't shrink. He didn't light on fire. So he can interact with his fellow human beings in a physical form. We shall see what that takes. Hey, get up to Maine. Maybe he'll get a delicious lobster. He says they're $7 a pound now, so stick it to him. Make him buy you one. And while you're at it, head on over to optionpit.com. Sign up for I was looking at some of these messages here. Sign up for what do we got? Option Pit. Sign up for his newsletter, all the other good stuff they got going as well. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing, for fighting through the chat problems. Let's hope Mixler gets their act together for Thursday, and we'll see you then for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.